Here we are looking at the Euro-Aussie daily chart. You will have already seen what a ringed high formation looks like and what a ringed low formation looks like. So that you get to see it again in this video, I'll draw the ringed high formation for you first of all. And we look for ringed high formations in a downward trend because we are looking to trade with the trend. A ringed high formation is simply showing us that price has been pulling back before it then turns back into phase 1 again in that downward trend. So we look for ringed highs in a downward trend. And the key point about a ringed high is that the highs of the bars get higher and the lows of the bars get higher as well. Now we don't need this first part of the ringed high, but this shows us what was happening at the time. This is the actual structure of the ringed high. Quite simply, when we have the two bars in this manner where the high has got higher and the low has got higher, we aim to sell, that is, place a sell order underneath the low of that bar, with a stop loss above the highs of that bar, assuming that the next bar is then going to trigger into the trade. So once again, we're looking for the lows of the bars to get higher. We're looking for the highs of the bars to get higher. And when we see that, we place a sell order underneath the low of the second bar with a stop loss above the high. If the trade gets triggered, if the order gets triggered, we are in the trade. If the order does not get triggered on the next bar, and this happens, we simply wait and replace our order underneath this level, waiting for this to occur. And of course, the continuation of that trend. So again, it's these three bars that give us that ringed high formation. We trade or place an order on the second bar, assuming the third bar is going to trigger in. If it does not happen, we simply cancel our orders and wait for the next setup. I've drawn the arrows on this Euro-Aussie daily chart to identify the ringed highs in the downward trend. We see that this bar here, if we zoom in a little bit further, this bar here was indeed bar 1, bar 2. We expected this to create the ringed high, so we placed a sell order underneath here, but the next bar went up, the trade was not triggered. As a result, we cancelled those orders, and we have the second ringed high here. The lows have got higher, the highs have got higher. We have a ringed high formation. We place a sell order underneath the low of this bar with a stop loss above the highs of that bar. Price then on the following bar opens up, moves down, triggers us into our ringed high position, and then pulls back a bit towards the end of the day. But we can see that the initial ringed high did not get triggered. This second one here created that 1, 2, 3 bar formation which generated the trade for us. And that's because we had the higher low and the higher high, and again the higher low of the bar and the higher high of the bar. This then led to the trade being triggered, which created our ringed high formation. If we look through, we're happy this trend is moving down. And the next bar that actually pulls back is this one. There is a higher low of the bar and a higher high of the bar, just. As a result, this is bar 2 of the ringed high formation, and the one that we place our sell order for with a stop loss above the high there. The next bar opens up, triggers us into the trade, and we can see it then runs down in our favour. Now the interesting part here is we now have a ringed high formation that sets up here which does not get triggered. As in, we get an inside bar following the trade, the ringed high was here because of the higher low and the higher high, and the trade simply never got triggered. As a result, we cancelled the orders, and perhaps we got into the trade using the inside bar system rather than using the ringed high approach. We follow it through. We see we have another ringed high formation here on these 3 bars. This being the second bar of the series, second bar of the formation, with the higher low and the higher high. We place our sell order underneath the low, with a stop loss just above the highs, and we see price again moves in our favour. So you can see that in a trending marketplace, these ringed highs work very well. They may not always trigger into the trade, that is, the orders may not get triggered, but there are several good entry points into the marketplace. Similarly, we can see all the way down here now, another ringed high with a slightly higher low and a higher high that then gets triggered. Again, another ringed high formation here. The lows are getting higher, the high gets higher. This is our ringed high. And we get triggered into the trade. We get scared, and price then moves in our favour. Again, one of the final ringed highs here, towards the end of this trend. Higher high of the bar, higher low of the bar. We place our sell order underneath there with a stop loss just above. The next day closes in our favour and obviously triggers into the trade. And again here, another ringed high that gets triggered, the higher low, the higher high of the bar in that downward trend. Third bar triggers into the trade, closes slightly offside for the day, but then over the coming days continues in our favour. Similarly, as this trend changes from being a downward trend to an upward trend, we see things like the inside bars that set up there, with the ringed low formation in this case now, because we are in an upward trend, the ring low formation being the exact mirror image of the ringed high. The ringed low formation sets up here, lower high and lower low on the price itself, so the bars, the lower low and the lower high, creates that ring low formation, which the third bar of that formation triggers the order off of the high of the bar and runs in our favour. So again, it's that in the upward trend, we look for the ring lows. The low of the bar must be lower, the high of the bar must have been lower. That then gives us the second bar of the ring low formation, and the third bar then ideally triggers the trade. And we can see this then aggressively ran in our favour. And the final one on this chart, we see that the highs got lower, the lows got lower, and this was our third bar of the ring low formation. So bar 1, bar 2, bar 3 of the ring low formation. And indeed the trade has been triggered and is slightly offside at present, but this is a ring low formation in an upward trend. So again, looking at that downward trend, we see the ringed highs are a good way to get into the marketplace, all the way through that trend. Similarly, in the upward trend, the ring lows give us the good signals. Ringed highs in a downward trend, ring lows in an upward trend. Now that's of course assuming that the market is trending. We've seen these work very, very well in trending markets for the ringed highs going down and upward trending markets for the ring lows. If the marketplace is a bit more sideways, we can still see that these ringed highs and ring lows work well. And if we look at this chart, we can see that we have ourselves a ringed high, which then triggers into a ringed low. We then get a ringed high that fails, another ringed high which obviously runs in favour, a ring low formation that fails, the ring high formation that then plays out, and just to finish off there, we also then see the ring low formation, and we can see that looking at those opportunities there, we've had likely a winning trade from this particular setup. Likely a winning trade from this particular setup. This, of course, works out to be a losing trade. We then see another likely winner. Of course, a failure there. And the final two give us a winner and another winner. So out of those 1, 2, 3, 4, 5, 6, 7 different setups, we've got 2 losing trades, 5 winning trades, and it would appear that the winning trades seem to be significantly larger than the losers. As a result, that's what attracts us to these ringed high and ringed low setups, that in ranging sideways markets, plus also in trending markets, they give us good high probability opportunities to enter.